Joining us, Tom Piotrowski now from CommSec for a look at the markets. How are we looking today, Tom?
Pete, we're looking forward to quite an encouraging start for the local share market this morning. The futures are telling us that we'll see the market up by more than 0.8%, which is quite good. And it's quite a lot of relief in the markets this morning, considering that we've threaded the needle on one of the more important risk events of the week with the June inflation report out of the US, which mercifully came in rather benign terms. There was a larger than expected fall in US inflation, but what particularly stood out was the moderation in the core rate of inflation, Pete. There are a number of ways that you can chop up inflation, but the one that is most important for progress on inflation and the one central banks look at is the core. It removes the volatile items, and this measure came in below the market's expectations at 4.8%. The market was looking for a figure closer to 5%. So as you might imagine, it was quite an upbeat note being struck in equity markets. We had the Dow Jones up by 0.25%, the S&P 500 up 0.75%, and the Nasdaq was up by 1.1%. And that last measure, the Nasdaq, was most acutely impacted by the drop in long and short-term interest rates. So we saw a fall of around 12 basis points for both long and short-term interest rates in the US. That's quite a meaningful decline. So the next couple of days will be important to see whether or not those improvements are sustained, but certainly an encouraging step forward in relation to the US managing their inflationary outcomes.
All right, Tom Piotrowski, appreciate that. Thank you.